Hello, my name's Ethan. Make sure to check my website, ethanwrenn.com. From there you can find links to all my various socials. We are currently live on Twitch, YouTube, Twitter, Facebook, and Kick. So wherever you might be seeing this, make sure to follow and subscribe if you'd like to get notified when we go live next. On my website, I actually have a blog. Just go to the website, top right-hand corner, click blog. You'll be presented with this page. There are a variety of different articles covering finance, some of the history of companies we cover here on this channel, gaming, emulation, technology. So there's bound to be something that interests you. Each and every page has its own unique video that coincides with the content. And at the very bottom of the page, you're even able to leave a comment and let me know what you think. On my YouTube channel, we now have over 806 videos. I'd really appreciate if you guys go and check it out, potentially subscribe. Since there's so many videos, the best way to potentially sift through it and find what you're looking for is, again, going to my channel, clicking this playlist tab, and there's a bunch of different playlists covering things like commodities, Forex, ETFs. So it's a great way to kind of find what you're looking for. So the next company we're going to be looking at is going to be Shopify. With New Year's Eve being on the horizon, simply coming over here, we can look at this video. This video was made January 31st, 2023. So it's almost been exactly a year since we made this video. Let's see how this company has performed over this past year. We're going to be looking at Shopify, filmed January 31st, 2023. Online retail trade, so just buying goods online, is the second fastest growing industry in America right now. Who are the names that would be leading the online shopping space? You have your names like Amazon, Shopify. I mean, who else is really at it? From there, you could maybe say Walmart, Alibaba, maybe, if you want that diversification into the Asian markets. But when it comes to the US, I'd say Shopify is probably one of the best names to be looking at. Not just because of what it offers to the consumer, but because of who those consumers are. I feel like the people who find interest in Shopify products really add as much value to the brand as the brand Shopify offers to the consumer. And it's this kind of symbiotic relationship they have. What do I mean by that? What do I mean by that when I say that? Well, let's take a look. This is one example, of course. Just recently, there was an announcement that the Supreme website, the person who made this hat, the website I actually bought this hat from, is going to be partnering with Shopify. They are moving their main flagship website over to Shopify. It's a pretty good thing. If you're an avid Supreme fan, you know it's quite hard to fight and battle with fists and baseball bats against bots who are trying to buy your products before you because they're in such high demand and they resell for astronomical prices. Supreme has been known for offering these limited releases of shirts that range from $50 to $60 and hoodies that range as much as $140 to $170, but then resell for 3 times as much, right? It's a pretty valuable brand. And when you see these actual Shopify customers, such as Supreme, who are actively adopting the Shopify ecosystem every day. You have new companies, new brands, and new customers, such as Supreme, who are moving to Shopify, who really help bring that esteem to Shopify, right? Like, the more we see this adoption of the Shopify platform across these major reputable brands that have, caring and active communities online and in the spaces like fashion or technology, the more you're going to see Shopify flourish in the long run, I feel personally, right? Not only that, it's quite hard to deny that Shopify is offering an amazing value at its current entry. As you can see, Shopify, ever since its initial IPO, has gained as much as 8,800%, guys. That's 8,800%. That is 88 times its initial IPO price. 88 times. 88 times. If you put $1 million in, you would have $88 million. $88 million. If you put $1,000 in, you'd have $88,000. And it's not very old, guys. That happened real quick. With their initial IPO date being in 2015 and their peak being in 2021, that is 6 years. That is. So again, this is something we like to look at. Contrary to the current IPO market, IPOs have been dead for a very long time. All IPOs, regardless of how reputable or good the company is or how much you use the product, very much underperform in recent years. But looking at a company like Shopify, ever since their IPO, has shown extraordinary growth to the tune of 8,800%. Astronomical. And again, it's not that old of a company. We typically like to look at old companies. I like to see companies with like a minimum of like 3 to 5 years price history. Really no less than 5 years price history, and this very much meets the bar, being Shopify. And in that time has just shown extraordinary growth. It has had some pullbacks here and there, but again, it continues to grow and grow. Hundreds of % per year. It's amazing. Absolutely amazing. Now, this company doesn't offer a dividend, but let's be honest, guys, doesn't need to. Clearly, that money is getting put to good use by building into the asset here. What else do we like about Shopify? Let's look at a more technical sense, right? Now, when we look at these companies, now every company we look at here, we typically look at the RSI. If you come down here, we have the 30 and we have the 70, the top and the bottom. Now, when the RSI is typically high in the sky, so is the company. When the RSI is bottoming out, touching the ground, so is the company. So if the RSI is coming all the way down and it is touching that 30, that's typically a sign that it is at a support, right? That is typically when you want to be buying. When you're placing your trades, you want to know, is the RSI on the weekly and the monthly touching down? I don't care about the RSI on the 15, the 30, and the 1 hour, because those are tiny. Those are for babies. I'm planning on being here for a while, so I want to be looking at the big time frames. I'm planning on being here for a while, so I'm going to be looking at the big time frames. This is important, right? We aren't day traders. We are investors. Whether you are a portfolio manager looking for something they can add to their portfolio to enhance their returns, or maybe you are an average person like 90% of the world who works a 9 to 5, who has an extra $100, $200 a month that you want to be able to put into something that's going to help you plan for your future. You don't want to be micromanaging these trades all day, every day, in and out. This is not what people want. Something that can show growth for extended periods of time, whether it's 6 months, a year, 5 years. This is a desirable trait for most people who are allocating money. Some less savvy people have it in their mind that they're just going to get rich quick overnight. They're going to buy this thing. It's going to go up 10 million %, and they're just going to be rich. And it just doesn't work like that. But by making these very smart allocations with their money in very high quality companies, they can passively gain income consistently for months, if not years, without having to micromanage this trade every day. This is a desirable trait. What else do we already commented on the financials, but let's quickly do this again. As you can see, during this pullback, they also had a pullback in their financials. It makes sense why the stock would pull back when the financials are pulling back. But what has happened here in Q1 2022 through Q3 2022, we've actually seen this rebound in their profit margins. The green represents their profit margins. As you can see, they are improving. They are actively improving. This is a great sign. This is what we call opportunity. This is what we call value. We're not buying a company that's like actively at its all-time high and just hoping it goes higher. No. Right now, the market is in a very interesting state. We've seen, again, over this unwinding that has already happened over the past 2 years, objectively, that is past tense. To be talking about that in the now is insane. You are so late and just behind every curve and every... Yeah, it's just so interesting, right? Because you have the market cycle of emotions. Back in late 2021, crypto was at its high. You had CNBC reporting on NFTs as if they were something of actual value. You had Nike setting its profile to an NFT. You had people thinking just it's going to go to the moon forever, right? Everything's just so great. Things are high. They're better than ever. There's this state of euphoria, and all the headlines are great. This is not a good sign for you. After having gone through this severe pullback, it's only then, when markets were officially really, really, really at their bottom, that headlines were not good. They were saying, oh, techs are having massive layoffs. SVB is happening. That's the whole banking thing that happened. Just wars breaking out. Those were the headlines. And against all the odds, somehow, not just Shopify, but the entire world has shown extreme gains throughout 2023. It's important to keep in mind this trader cycle of emotions. Again, when things are super high in the sky and everything's euphoric, that's when you are at the highest potential risk when you enter that trade. Meanwhile, when things are at the bottom and the headlines are not so great, this is potentially when you should be making that leap, allocating some money and planning for when those conflict times resolve into better days. Trend. But as you can see, it is actively recovering. What else do we like about Shopify? As we've mentioned on almost every other video or every other index or company we've talked about today, one of the first things we see when there's a change of trend or a pivot or a company that's about to go on a bullish run, the first thing you'll see on that weekly time frame is these candles will start to move over that weekly 20 moving average. And again, it has jumped over that weekly 20 moving average. What happens after that? It sets that 20 moving average as a support. It came back, boom, touched that 20 moving average support. What happened after that? It bounced. It confirmed that 20 moving average as a support and is now actively rising, guys, actively rising. These are all great signs. These are consistent sets of indicators that we apply to every symbol that we look at here. Every symbol. We're treating everything equally using the scientific method. Let me check. I've been going for a minute here. We still got time. Okay, I think that's about everything we need to hear from this previous video. Do we want to look at where Shopify is today, guys? The current price for Shopify is $77.90 per share. Absolutely phenomenal. So if we come back to the time when we originally made this video, it's roughly, as you can see here, $38.89. It was right here just as the stock was crossing over that weekly 20 moving average. It had come down, bounced off that weekly 20 moving average, establishing it as a support, and then it continued to run. From its very bottom, it's currently up as much as 215%. And from the time when we made our video, it is up as much as 113%, drastically outperforming the S&P 500, drastically outperforming sectoral technology ETFs. It's just done extremely well. As you can see throughout this time period, in Q3 2023, they beat earnings. In Q2 2023, they beat earnings. In Q1 2023, they beat earnings. And even in Q4 2022, they beat earnings. So throughout this period, they were consistently beating earnings. Look at this. Their market cap as of the time of recording this video right now is exactly $100 billion. Isn't that interesting? Isn't that interesting? Again, coming back to the video, we've seen this company continue to push new 52-week highs over and over and over again. Currently, their 52-week high is $79.99. Very interesting how round that number is, and so close to 80, right? We've seen this company come up and is now kind of approaching, kind of within a few inches, a few dollars of this weekly 180 moving average. So that is something to keep in mind. Will it break above? Will it act as a resistance? Something to keep in mind for Shopify holders. But again, looking at the year to date, I mean, this company has just performed extremely well. We have a bit of an uptrending price channel here. There was a little bit of a hard time, again, happening right through that September-August time period where it did break below this daily 180 moving average for a moment. Earnings happened, popped right back up above that daily 180 moving average and continued to run, again, pressing those 52-week highs. Just to compare it to a few of its peers, we can look at like Amazon and how Amazon performed during this time frame. We could look at the NASDAQ. We could look at S&P 500. And again, just looking at this time frame from roughly when we made the video here, or we'll just say October 2022, we saw the S&P gain as much as 32.91%. We saw Amazon return as much as 42.13%. We saw the NASDAQ return as much as 57.06%, with Shopify producing a whopping 188%. This could have definitely helped you enhance the returns on your personal portfolio if you had increased exposure to Shopify. And I think this trade just kind of worked out tremendously. You know, there was a lot of naysayers, a lot of people who really didn't think 2023 was going to pan out as well as it did, again, with news articles citing tech layoffs, etc. But again, you need to use these opportunities where the market was significantly pulled back to be scaling into some of the most high quality assets the market had to offer. Again, Shopify is a growth / tech company, so it does not really offer a dividend. Makes sense though. And it was just quite an excellent performer. Thank you to anyone who potentially saw the video and showed any form of support for Shopify during this time period. It does not go unnoticed. We were all in this together. Again, we're all on the same team and we're all playing on the same field, right? There's no reason to be fighting with people. Again, when we're doing a lot of this analysis on companies, it's very math heavy. We take a very technical approach. There's really not, we don't deal in opinions. We don't look at things just because we like the products of the company. You know, we look at these very objective, quantitative metrics that we can compare to a broad variety of potentially very different companies that are from very different sectors and very different parts of the world, and take some sort of objective stance on it, you know, being able to compare and contrast based on these factors. So again, Shopify performed extremely well throughout 2023. If you showed any sort of support for Shopify during this time frame, you were handsomely rewarded, guys. We're going to move into our next company.